What's going on, guys? This is Aaron from Departures Capital, and we're here with Marc Henderson, President, Chief Executive Officer, and Director at Laramide Resources. How are you doing today, Marc?
Yeah, excellent, Aaron. Thanks. Nice to be with you today.
Yes, for sure. It's a pleasure to have you on the channel. So can you start by giving us a brief introduction to the company and telling us a bit more about what you do?
Sure. Well, Laramide's a uranium developer, so we're one of the companies set up to meet what's a growing imbalance of uranium supply demand that's going to be required to fuel the growth that we're now seeing again in nuclear power. And as a new entrant, we obviously are keyed on some key variables, including where you are in terms of the cost structure, where you are geographically, and also scale. So the company was really established to be a supplier of choice with diversified production sources, really to a supplier of choice to probably Western utilities. And that's still really the mission statement of the company. The uranium's sort of emerging now from a long slumber it was there for a whole variety of reasons. The bear market went on a lot longer than I thought those of us on the inside thought about, probably external investors as well. So there's probably a whole lot of people that don't really understand a whole lot about the uranium sector, where it fits in within the whole energy sector, and really what the opportunity set is now, which I think is pretty dramatic.
Yeah, it's great to see this sector coming back because I've followed it for quite a while. So, the company just commenced its 2022 drill program at its Westmoreland uranium project in Queensland, Australia. So this is pretty exciting for you guys. Can you tell us more about that?
Of course, yeah. So we have two big development assets, one in the US and then another in Australia, which is Westmoreland, which is really the deposit that has the known resource. And then we have a contiguous asset that basically encompasses all of the geological potential within what we call the district. So we have a district scale opportunity there. And we're now back essentially trying to grow the asset again, create visibility on the asset, and get the asset now we're in a better pricing environment, marching ultimately towards the development and production. So we're drilling a target. We've got 50 million pounds there at Westmoreland. So it's an asset of significant scale that would probably be just inside the top 10 kind of uranium mine at around 5 million pounds a year. And we have 52 million pound resource. There's resource that we never included from some of the drilling we did, when the bear market started. We've developed some new targets that are interesting, and we're really sort of going at it again with a view of maybe we can, bump up the resource, but also just really get the asset to a stage where it's kind of ready to move forward again. And so we're excited. We like this target. They're basically radiometric anomalies that we know about. We're starting at a target called Amphitheater, which is, from a scale standpoint, this will give you a sense of the scale. Like this target is, which we never got to in the previous bull market. This target is 16.5 kilometers from where one of the other three main deposits are. And then we have a second target area for later in the year. That's an area that we know hosts resource, and we're really going to go in there and probably firm up that resource and probably include it in our 43-101 resource calculation in the fullness of time.
Yeah, drilling is usually the most exciting time. So you guys will have an awesome year. So Laramide has multiple projects in the US along with Australia, like you mentioned. Can you tell us more about these mining jurisdictions and why it's so important to pick favorable ones nowadays? I know we were just chatting about that.
Well, we've had this view for a while. I mean, this company was put together really in the past cycle, and since then we've seen really the globe shrinking in terms of the favorable jurisdictions and what have you that you probably want to be invested in. There's been some high profile situations, I think, where the government, for one reason or another, whether it's overt or a little more subtle in terms of, well, we'd like to just have a little temporary tax on your project that turns out to be about 120% of all of the action. I think you want to be in stable jurisdictions that are deemed to be secure particularly from a tenure standpoint. I mean, our two things really in uranium in particular, number one would be the obvious thing about tenure, where your tenure, your legal title and ownership isn't threatened at all through the fullness of the project, because these are long lead time projects. Obviously, you need certainty. And then the other thing is uranium, which is a little bit different than maybe some of the other commodity-based companies that you cover. It's very much a contractual business, just because the whole thing is really underpinned by long-term utility contracts. most of the revenue of a big company like a Cameco or something would be contract driven. And obviously you need a stable rule of law jurisdiction when you're, the contract law is so important to basically the carrying out of your business. So that's the other reason that I think, particularly in uranium, it's a factor that you want to consider.
No, it definitely is. So jurisdiction is one thing. Laramide also has projects at different stages of development. So can you tell us why this is an attractive feature for a uranium company, and also, what makes you different from, let's say, some of your peers?
Well, I think one of because we were fortunate when we entered the business, we kind of started with a big chunky, trophy type asset, which, ultimately before us was owned by Rio Tinto. And then we progressed and basically did all the more technical work to basically get it in a position that it was kind of ready to move forward. And our raison d'etre at that point seemed to be to find complementary things in other jurisdictions that would make sense and effectively really have a multi-asset portfolio or a pipeline. I think the one differentiator with us and maybe some of the other companies that are well within our peer group is a lot of these companies are single asset type companies.
Mm-hmm.
And some of them obviously are single asset companies with a great asset that's an asset of scale. And some of them have assets that don't quite have so much scale. So I do think it's an attractive opportunity from that standpoint in terms of having your own kind of internal pipeline that could ultimately get developed. And you could ultimately see, even if our two main assets got into production, you're talking ultimately kind of an 8 million pound a year kind of production profile, which is, some of the other peers are going to have to obviously do some M&A or have a lot of success with greenfield exploration in order to get to that same place.
Yeah, no, definitely. That's a attractive feature of the company. So, what are some of the major catalyst investors and prospective shareholders should be looking out for this year? Or what are you excited about?
Well, I think obviously we're excited about being drilling again. It's always good to be out drilling and improving the asset and moving the asset forward. So I think that's the obvious thing. Certainly in Australia, I think you'll see a whole suite of technical drill type information to come, including our first drill programs on this Murphy project, which is the kind of the greenfield side of our Australian land position, which we're very excited about. We've done a lot of the prelim work there. Your geophysics and all the things that don't get the market too jazzed up because they seem to mostly just care about drilling. Yeah. But we'll get to that stage this year, so we're looking forward to that. And then I think in the U.S., I think we want to start seeing some real visible progress on getting our final permit on our ISR project and finally putting some economic numbers out on that project. So I think people, when we get to that, finally they can see the rig turning on the ground and moving towards getting those permits and ultimately being in production. I think that's going to be a big driver. So, you're in uranium because it's a critical, strategic metal. Obviously, we're in an energy crisis. There's a lot of talk about it. There has been a lot of talk in the United States over a number of years, starting with the previous administration. They were going to do this, that, and the other thing. They were going to create a uranium reserve. There was a lot. They were going to ban Russian enrichment. There's a lot of talk about everything. The reality of just there not being the supply there yet hasn't actually landed. And I think if that were to land, I think anybody with US type assets is going to be in a very good position, because I do think the possibility of some legitimate government action, as in what can we do to help you yesterday sort of attitude from the federal government, et cetera, which is not what you really have now. It's mostly a lot of chatter, and the utilities really are, they're still relying on the status quo as far as how they fuel all their, I'm not talking the Americans here in particular about how they've managed to procure supply, because they've been heavily relying on Kazakhstan. So I think the macro in uranium, more so maybe than in a lot of other commodities, is really important. So those drivers, like whether it's governmental type action or whether it's just the price action that you see in, say, the spot price, which historically has been the big driver for the whole sector. And this sector would be very highly correlated versus some other sectors. So, you kind of win if you get the macro right in uranium. And I think you obviously you win if you get the right companies within the sector as well. So you sort of have two chances in uranium, especially if you think that this has been a kind of correction, that it was kind of overdone, that we're sort of living through now, because we went from, we're $25, $30. Cameco's shutting in stuff. There's no new entrants. So then we were 65 and everybody got excited. And then we suddenly had this huge pullback to 45. But I think it's an interesting entry point here, just because I think there will not be any new supply at obviously at $45. And I think the next leg up, I think this whole bull market that we had going on in the latter half of 21 is going to kick right back in.
Yeah, exciting times for you guys. And now we can talk a little bit about the uranium market. So although we did see a bunch of volatility in the stock market, the demand for energy is still on the rise, and the uranium market has been climbing over the past few years. Like you mentioned, we did see a bit of a pullback recently. Where might we go from here? And, what should we be looking out for as a uranium focused investor? I know you just touched on the political aspect in the US. Anything else that, you're kind of looking out for, or catalyst in terms of the overall market?
Well, as I said, Aaron, I think that the spot market, whether it makes any real sense or not, and frankly speaking, from the standpoint of the people that are in the business, the spot is kind of a secondary market. As I said, really, it's mostly a contractual business around the term prices of things. And I think the new entrants are ultimately going to want some contracts to kind of underpin their business going forward and demonstrate there is pricing power, if you will, out over a longer period of time. I don't think any new entrant is probably going to be wants to be entirely reliant on the spot market, but that spot market gets kind of buffeted around. And I think the move from 64 back down to 45 was kind of overdone. We have this physical player, which is the Sprott Uranium Trust, which was a very powerful player, took a lot of pounds off the market, basically have sequestered kind of those pounds, and is an important driver. Those physical players are an important driver, but they are in other commodities. I mean, the physical guys in the oil, when oil gets interesting enough, they buy a tanker and they buy oil and they sit with the oil in the tanker until the price goes up. So it's kind of an element of that. It's really, in the long run, probably less important. But I think what we haven't seen yet, and that'll be the real driver that I think people are waiting for, and I think if you listen to industry leaders like Chemical and people like that, they're really looking to be able to demonstrate that the utilities, which is really the buyers for all of the product, have said, okay, we're willing to pay, 50, 60, whatever that number is. And everybody says, wow, this market, it's really on, and it's going to be on for a long time, because once this market gets kind of going, there's a lot of contracting demand that has to be done. And it's counterintuitive, but most of the contracting tends to get done when the prices have had a big run up. And that's what happened in the last cycle. And, it's probably going to repeat itself to some degree this time around. And I think we're waiting to see kind of evidence of that's the case, and that not only are the utilities really coming into the market in a meaningful way, but they're coming in at a price level that probably validates these companies at levels that are probably multiples of where they trade at now.
Yeah, no, it's really interesting to get your opinion on the energy market. And thanks for that, Mark. That was really interesting. So where's the best place for investors to find out more information about Laramide Resources? If they want to find out more information on the projects, or they want to contact the company, where should they go?
Well, just go to our website, laramide.com, obviously. And I believe there's contacts with IR or myself. Be happy to answer any questions. Feel free to pick up the phone and call us. We love talking to shareholders.
Great. Well, it was a pleasure to have you. And, thanks for all the information. Best of luck. Sounds like you guys have a exciting year ahead, and hopefully we can have you back on for some updates, when we get some numbers going.
Yeah, terrific. Thanks. I'd welcome that, Aaron. Thanks very much.
If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below, along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.